Man, oh man, what a day. One of those days you love being a trader. Well, it's back to work tonight, guys. Hope you made some money out there today. A wild one comes to an end, but we get back to work tonight. Thursday is coming right around the corner. We get some more inflation data tomorrow, and we got some beautiful ranges, some great rotation on the chart tonight, and I am excited. We get some great trades we're tracking for Thursday. As always, I'm going to cover all my favorite trades in the video here tonight, that we have a game plan to make some money tomorrow. Before we jump in and get the game going tonight, make sure you subscribe to the channel, that way you don't miss tomorrow night's video. And if you enjoyed this lesson tonight, do me a favor. As always, I appreciate you guys tuning in. Hit that like button for me. Give me a shout out in the comment section below. Thank you so much for watching tonight and supporting this channel. But enough of the intro, Joe. Thursday is not going to trade itself. There are some really good trades setting up for what might be a very, very busy day tomorrow in our trade room. Everything is range bound right now. Range on the S&P, range on the Nasdaq, range on the crude oil. Ranges are pretty easy to trade as long as you know the situation that you're in, right? Buy low, sell high. Likely, the key to making the big money tomorrow will likely be using stops as fuel. Running stops, right? Running stops around the lows, running stops around the highs. And we'll definitely talk about some breakouts and how we can use stop runs for breakouts, right? So if you like making money tomorrow, running stops, using ranges, we're going to cover all about that here tonight on the video. We got long side trades, short side trades, and we're going to go into a lot more detail in this masterclass I have scheduled here for you here for tonight. Now, before we jump in and talk about all my favorite trades for tomorrow, let's all make sure we're on the same page tomorrow. We do have some big news tomorrow, 8:30 Eastern time. The PPI number, kind of like the little cousin of the CPI report. We're probably not going to see the wild reaction to the PPI tomorrow, but you do want to be aware of that. It may surprise people tomorrow. We'll definitely be keeping an eye on that tomorrow morning in our trade room. So keep that in mind tomorrow, 8:30 Eastern time, and we'll be in our trade room, 8 o'clock Eastern time. We'll get charts all prepped up from the overnight session, watch that news come out, and we'll trade the reaction tomorrow morning. And we'll talk more about the game plan for Friday's consumer confidence number in tomorrow night's video. Back to our charts though, right? Remember, the news, 8:30 Eastern time tomorrow. We're not trading the news. We're trading the reaction to the news, and we'll go with some game plans here tonight. S&P's ready, Nasdaq's ready, crude oil is ready. I'm going to cover all my favorite trades on all three of these markets tonight. If you like making money, I would definitely make sure you watch all the way to the end of this video, because every trade I talk about can be applied to your favorite market. Don't just watch your favorite chart. I will wrap this all together at the end. I'll make it worth your while to stick around all the way to the end of this video. Let's go S&P, we'll go Nasdaq, and we'll finish up tonight on the crude oil. Guys, these are all tick charts. You can see upper left-hand corner, that's an 8,000 tick chart. You can see all the time frames in the upper left-hand corner. This is the 21 moving average. 21 EMA is that yellow line on the chart. And don't forget, I provide 60-minute charts, 4-hour charts linked up in the description of the video. I like to use the 60-minute chart to give me a directional bias that helps me filter out where the best trades are. So if you want to see some higher time frame charts, a bigger picture analysis, check those links down in the description of the video. With that said, what's the most important factors on this chart right now? There are really two big factors on this chart. One, of course, is we are bullish overall on the 60-minute chart. That is the lens I'll be looking at this market here tonight. We're pretty much bullish across all three of these markets. And really the most important clue on this is a range, but not just a range rotation. Now, if you're taking my free trading course right now, we talk a lot about trading ranges, not just about ranges, but we talk about how markets like to rotate back and forth inside of these ranges, right? They're going to go, right? They'll go down, they'll go up, they'll go down, they'll go up, and they're going to want to rotate, right? Back and forth. And if you understand how ranges work, you won't get fooled by buying high or selling low, right? So ranges are really, really valuable. They're one of my favorite ways or favorite types of markets to trade. So if you understand the way these ranges work and you understand that we are rotating now off the low of that trading range, we have a pretty good idea now of where the market wants to go next. It wants to take out some of these highs. Now, of course, because we have an overall bull bias, the odds are a little bit better the buyers will succeed and break through the highs, right, as we go higher here. So as we go higher here, we can definitely assume that buyers would love to get some breakouts, right, would love to buy some breakouts. And I have a handful of breakout patterns we'll talk about in the video tonight. You also have to assume, too, that at the highs of these ranges, I mean, if history repeats itself, we'll likely see a reversal back down again. So you know that sellers are looking for some reversals off the high. Same thing on the Nasdaq as well. So we'll definitely talk about some reversal patterns, some reversal setups I'm tracking here for tomorrow. As we go lower, right? If we go lower, now this is a very important part of ranges. We talk about, we use a term in our trade room called the objective. The markets are always trying to accomplish something. They're always trying to get somewhere. And so if we understand that market right now is rotating back and forth, and we understand they're trying to get up around these highs, right? If we were to, for example, pull back a little bit to the low of this channel, right? I'll bet buyers would love to buy at the low of that channel. It may not be the low of the range, but they probably would love to buy the low of that channel on the way up to the objective, right? And then potentially reversal back down. So I like the idea of the long off the low of that channel. And of course, if it all fails, right, if the market rolls over, right, back to the low of that trading range, well, now we have what's called a failed rotation, right, off the high. Still want to be a buyer. I like being a buyer down here. We're still overall bullish, but now I've got to be a little bit more careful, right, buying off that low. Again, we like the idea of rotation. So if they fail that rotation, there's definitely money could be made off the low, but we've got to be a little bit more specific on the entry pattern we use on the entry. All right. So boy, as you can see, there is no shortage of ways to make money in this market here for tomorrow. Now, I want to talk about as we go higher here in a moment, all right? I'm going to cover that because that's kind of the most likely scenario, right, is we keep going higher, take out some of these highs. I want to talk about breakouts. I want to talk about reversals off the high here. But let's talk about, like, one of my favorite trades here for tomorrow would be getting that nice pullback off the low of this channel, right? Market's trying to rotate all the way to that high here. Now, this is where you want to look for one of those failure into pullback combinations I talk about in the free trading course, right? So if we pull back to that low, I'd love to get down underneath the moving average, okay? This is where the fun starts. The sellers, okay? Let's see if we can fool some sellers into taking it lower. Right? Remember, we're trying to finish off that rotation going higher. If I can get some of these bears to try a couple times on the pullback to that moving average. Remember, we're combining it off the low of that channel. If I can get some of these bears to get trapped in, right? What we can do is I can use their stops as fuel for a run back higher. A classic failure pattern off the low of a bull channel, almost exactly like I teach you guys and got a lot of examples of these inside that free trading course, right, on our website, right? Now, because we're in the middle, okay, in the middle of this range, I'd like to get the bears to try at least twice, right? Really rope them in, get those stops to get juiced up. That way, when I get that signal, it should nice and punch for us, right? And get that nice run going higher. Now, one thing you want to think about, if we do get that signal and a nice strong run higher going higher, we stop the bears out. Now, keep in mind, as we go higher, we're going to be running into overhead resistance around the high of that range. What's the danger up there? We don't want to buy high. Right? We want to buy low. We don't want to buy high. Now, I talk about one type of entry pattern in my free trading course that talks about which entry pattern is the best entry when you're worried about buying high. It's a trap, right? Always, always, always traps, right? So remember, when it comes to going into the top of the range, okay, when it comes to finishing off that rotation going higher, remember you want that strong run up. You want that shallow pullback, that higher high in price, okay, and that trap low right there. All right. So again, let's rope in the bears below the 21 moving average off the low of that channel, right? Stop out those bears, use their stops as fuel, like I mentioned earlier. And then as we're trying to go out and punch out some of these highs up here to complete that rotation, okay, now let's think about some bear traps, right? A classic trap pattern on the way higher, all right? Now, let's talk more about if we go lower. All right. Again, I am going to come back and we'll talk about the move going higher here, right? That will not lay you down on that. I got a couple good breakout patterns and a crown reversal off the high. Let's say now we were able to run all the way back down to that low. Okay. Easily could happen. Easily could happen. You saw how wild the day was today, right? So it could easily happen. Now, if we take out that low, this now becomes a failed rotation. That's a really big, well, it's not a very bullish clue, right? It's not a bullish clue at all. We are still overall bullish on the 60-minute, and we're still going to be at support below the range. So I like the idea of being a buyer on this, but these are scenarios where you got to be careful down here whenever you fail rotation. Okay? Remember I said earlier, let's use stops as fuel. This is exactly where you want to do it. Okay, and there's really two basic setups to buy off that low. One is a classic failure pattern, two-try failure. My favorite one would be a little trap right below that low. But the idea is pretty simple, right? We fail rotation, we roll off the high, momentum is very strong for the bears. We don't try to pick the bottom, right? We don't try to pick the bottom of that move. We let the bears try a couple times, and we simply buy right into those stops. Okay? And then a lot of times what happens is when this thing squeezes, right? When you get those squeezes, it will rip higher. And as it rips higher, this is where you go looking for those traps again, right? This is where you go looking for those trap, right? Those trap entries below that low, right? So again, classic range, right? Classic range. Get down around support. And this, of course, will be in a faster time frame, right? This will not be trading on 8,000 tick chart tomorrow morning. We'll drill down to our faster time frames. You'll learn that in the free trading course. We rope in the bears a couple times, right? Bind stops. And then as we go higher, right? As the market races higher, we don't chase it, right? We wait for that strong move, shallow pullback, higher high in price. And what do we say? Traps, baby, right? That's one of my favorite trades as we rotate back to the other side of that trading range. And again, I teach both of these, and there's like 100 examples of these inside that free trading course, which reminds me, I know that most of you guys have taken our free trading classes. You've learned all these entry setups, but if you're one of the few folks watching right now who haven't taken that free video series and learned my favorite entry setups and all the tactics we use in our trade room, I'll put a link up there for you in the upper right hand corner. Grab that link, take that free trading course, because the strategy you'll learn in that free video series will teach you a stupidly simple trick to know exactly where the best trades are going to be each day, and I'll make it easy to start making money. You'll learn my 4 favorite entry patterns. I have hundreds of examples in that video course of how to use stops as fuel and how to make money in range bound markets, right? So grab that link. It is perfect for someone trying to make a jump into full-time trading. You're going to love it. All right. Now, one more variation of this I want to cover real quickly here. Okay. Sometimes we get these things that run lower and they V bottom right off the low. Okay. These can be tricky. Okay, these can be tricky. If we race lower, and again, I am going to talk about this next, right? I'm going to go over that breakout going higher here in just a moment, right? I appreciate your patience. If we take a nosedive, right? If we take a nosedive overnight, and again, we want to be buying off of that low here. We may not get, right? We may not get that 1, 2 back up again, right? We may only get a V bottom. If it V bottoms off that low, what's the best way to trade this? The best way to trade this is to go out and draw a trend line off of this high like this. Okay, bring it down off that low, that big low, and then go out, look left, and grab those traps. Right? Now, in all reality, on the faster time frame, this could really be any of the entry patterns you guys are learning in the free trading course. I love traps. Those are my favorites, and you'll see why when you watch those videos on the website. Right? It could be a trap, could be a failure pattern, right? Any of the entry patterns, right? Off the low of that channel. Again, I would love to get this thing to try once, try twice, and blast up from there, but sometimes the market gets pretty wild, right? Like today, if we V bottom off that low and try to make that run back higher, yeah, now you you got a good plan, don't chase after it. It's always the hardest part about these. Don't chase after it. Find that nice tight channel off the high, mark it off that low, and then do not miss that first test, right? The first test is always the best test off of that low. Now, could you sell this going lower, right? Could you short this thing going lower? Right? If we're anticipating a move down, right? If we're anticipating a bounce off that low, could I short it down here? You definitely could, but what's the best way to short when you're worried about selling low? A trap, right? So if we end up going lower here, if this thing takes off to the downside and you're like, you know what, Joe, I want to short this thing going lower, right? The way you do it in this environment, again, because you're worried about support, what's the best way to short a market like this when you're worried about selling too low? Is traps, right? In this case, it's a bull trap. Okay, there's a lot of reasons why we love using traps in our trade room, right? So if we fail off the high, start racing lower overnight, that's the way you sell it, right? You don't just chase it and go lower, right? Don't just chase it. You grab traps, right? Just if we go higher, you grab traps there, all right? All right, so that gives you a good game plan, right? How to trade as we go lower, right? And again, right, keep an eye on that channel. Now, what I would love to have happen is I would love to have us go higher here, right? Can complete that rotation. Okay, how do we sell off the high, right? How do we sell off that high? How do we buy a breakout? That's a really good question. Let's talk about that. Let's go to the NASDAQ now. Okay, over in the NASDAQ is very similar to the S&P. There are two basic principles on the NASDAQ. One is we are bullish overall, right? That is the lens at which I'm looking at this. In my eyes, it's easier to make money when you are trading along with that overall directional bias, right? I will tend to lean more on the long side trades in a bullish overall bias than I will on the short side trades. If I'm going to be trading short in an overall bull bias, these are situations where you use a half size position, a quarter size position, right? You trade long with an overall bull bias, you load the boat, right? Full size position, right? Go big on your bet setups, as we say. All right. So we're overall bullish, right? That's the filter. That's the lens at which we look at this through. And you can easily see, right? The market pops up, goes into a trading range. Now remind me again, how do ranges work, right? Ranges love to rotate. They go back and forth, right? We go lower now, and now here we are rotating, going higher. Okay, these, by the way, these types of, we call these rotation off the low. Okay, when you combine a bullish range in an overall bull bias, these have potential to really blast. Okay, they have a potential to really rip going higher. So we have to be very careful trying to sell off the high on these, right? It's definitely possible, and we'll talk about my favorite reversal pattern in a moment in this situation. But be aware though, right? These type of situations, they love to blast, right? They love to rip, right? And really push higher. And you can see some really big breakout targets overhead here on the NASDAQ up around that 13,581, 13,635. Okay, now I think we covered a pretty good job on the NASDAQ if we go lower, right? We go lower, we trap the bears in, right? We pop it back up, right? We talked about that on the S&P. Okay, that same exact game plan on the S&P, right? Trap them in as we're going higher. What's the best one? Traps, right? We're running stops with failures, and we're grabbing bear traps on the way higher. This could easily, see that channel right there, right? That channel could easily be holding here, right? And running higher here, all right? So definitely keep an eye on that. If we make a real strong run lower, right? Same thing, right? Watch that V bottom off the low, right? Watch those two tries off the low. You got it, all right? So same basic idea there. And if you like the idea of selling it, if we end up ripping lower, right? How do you sell it? You sell those traps, right? Trap setups above the high. All right. Like I said earlier, a lot of stop runs, right? A lot of stop runs on our radar here because of these ranges. That's the way you make the money in range-bound markets. You trap traders in and you stops. All right. Now, going higher. For the most part, there are three main kind of goals going higher for a breakout. Before I talk about a breakout, though, how would I sell off the high? Okay. How do we sell off the high? We are in a very good spot for a short right now. But I hope I got through to you a moment ago. The rotational aspect of this is very difficult to ignore. Okay, now there is very much a potential reversal pattern. This is where we have to be, well, very conservative on this. And these types of reversals, we're only going to go, right, half size, quarter size position because you're going against the overall trend. But inside of my advanced classes, we teach this pattern, and it's one of the 3 different reversal patterns we teach in the video course. It's called a crown reversal pattern. Now, these are very similar to those 2 try failures. The one difference, though, is we need some sort of bull trap off the high. Okay? Now, I want you to see how this thing sets up. Okay, the most important thing is we're combining this reversal pattern off that high. It needs to be at some major objective, some major level of resistance. Okay, then I have a hard time, at least myself personally, trying to short against a bullish rotation and an overall bull market. So in order for me to time the entry on this reversal, I need to, we need to use the buyers against themselves, right? We need to let the buyers show us, because what's going to happen is they're going to want to hold this pullback and keep going, right? There's a lot of momentum here right now. Okay, the odds of that happening are pretty darn good. All right, and we'll talk about the breakout pattern in a moment. Okay, don't you worry. But if we see buyers, right, if they try to buy once and they struggle, and we go lower and they try again. Okay, we talk about this a lot in my beginner classes on the website. Buyers want to buy low, right? They want to buy low. So I need to turn this thing over and go lower. I need to trap the buyers in, and to trap them in, I have to get it going lower, right? They try once, they go lower, they try again. Okay, now this is the most important part right now. Once I have those buyers trapped in, now I have to be worried that as we go lower in a bull market, we're running into areas of support. And I have to be very careful, because as we go lower, this thing may bounce off that low and rip my face off, right? Again, we're not a bear market, we're a bull market. So if we know that threat, right? If we know that part of this is we're staring right in the barrel of the buyers. Okay, if we know that there's a threat of that happening, then that means we have to sell as high as we can. Okay, it's really important that you understand when you're trying to pick a top in a bull market like this. Okay, you have to sell as high as you possibly can, right? Because, for example, if I simply use, for example, right, if I was to use a classic 2-try failure, all right, we go up into resistance. Okay, the buyers come in, they try once, they try twice, and you go, oh, look, my stops are right here, right? This would be what we call a classic 2-try failure pattern, right? You guys are learning this in the free course. Okay, why not just sell right into those stops? It's a stop run, right? Well, look what happens. Oftentimes, you're running right into what? Into buyers, right? Into buyers. And this is where you can get a couple inches away from that target and it'll rip your face off, okay? So these are very, in my eyes, very risky trades. They're low probability. You're not going to get a lot of professionals who want to take that trade, right? However though, right? If you can get a little bit higher, right? If I can get that trap entry off the high, right? This has to make sense, right? I hope it does, right? If you trap if that trap triggers up the high now I'm already in. I've already got that 1-to-1 on this now, right? My stop now can move down to point of entry. I can get rid of all the risk. I can lock in a 1-to-1 target. And if it wants to rip my face, okay, right? Hey, not the big reversal I was hoping for, right? But that's the protection mechanism. Remember, being a successful trader, half the battle is learning not to walk into traps, right? Half the battle is learning how to avoid getting your face ripped off, right, on taking aggressive reversals. All right? If you can survive this stuff, and again, this is why I say in these scenarios, with this strong move like this, overall bullish, you got to make sure you time your entry properly. Right? Be very, very careful with that reversal off the high, right? So crown reversal pattern, it's pretty much the only way to do it to sell off that high, all right? Now we got that out of the way, going higher. Okay, there are 3 basic principles that you want to think about as we go higher. You ready? 1, we have a good idea of where the market wants to go, right? The amount above that trading range, okay? We go below the range, above the range. We have a pretty good idea of where we have levels of resistance up overhead, okay? The first one is if we rip through these highs, all right? If we start really ripping through this high here right now, remember, it's a lot of momentum off that low. These do tend to punch like that. If it rips off of this high, what's the best pattern to avoid buying high? Traps, right? We talked about this already, right? We talked about this on the S&P, okay? So if we see this thing just punch, right, and run higher, remember, strong move, shallow pullback, higher high in price, traps, baby, right? That's the way you trade that, okay? That's one way, okay? Now, as we get going higher, right? As we get going higher here now, you get your trap on, you're taking your profit, you're trailing your stop, right? We talk about that big target overhead, right? Now, at this point now, it gets very high up here now, okay? Now we're getting way high up. We don't want to buy too high. We now start thinking about this level, right? Breakout pullback. Ranges love to break out, okay? The way you make money on those, in my experience, is you look for traps. Okay, buy as low as you can. And then once we get a good distance outside that range now those prior highs, those become very attractive areas. So what we do is we go out, we look left, and we start finding bigger channels, right? Off prior highs, right? We connect these highs, bigger channels. We try to get that nice deep pullback now and get right up around that prior high. Right? It's a breakout pullback, okay? This is where failure patterns come in handy. Okay, now we get below that 21 moving average, right? We trap those bears in, stop run, failure, pullback combo, right? You guys are learning this in the free course, right? Failure, pullback combo off the low of that channel. Okay, that's a really good trade right there. Okay, so if it, again, as it punches and starts to get separation above that range, okay, we start thinking, okay, now how can I use that prior high as support, and how can I go out and find some channels, right? Some channels, and the channels will be drawn off highs, right? Off these highs up here. Okay, that's the basic principle. Okay, that's the second that second one. Okay, now another one is the grinder. Okay, a lot of times what happens is when these things rotate off the low like this, they begin to kind of grind, right? They grind. They may not have that punch to them, okay? Now, we talked a little bit about this earlier on the S&P. If we end up grinding higher, right? Kind of a low volume, these will be a little more difficult, right? They're very slow grinders like this. If they grind like this, they're pretty easy. Just mark off the highs, nice and tight, bring it down off that low, right? Again, start thinking about those prior highs there. And what we want to do is, when it grinds like this, okay, when it kind of grinds up like that, okay, look left, find some prior swings. Swings are where traps live. Those are my favorite trades. You guys know that already, right? Traps get below the moving average. That's where failure patterns live, right? Speaking of traps, trap the bears in. Get the bears getting short below the moving average and buy into their stops with a failure, right? Failure into pullback combination, right? All right, so that's the way you trade those kind of pop and grinds, if you will. And again, in this situation, take some profit off at the high of day, right? Profit off the high of day and leave a runner, right? Up around that 15, right? Or 581 to 635. All right, guys? So again, if it punches, it's a bear trap going up. Right? Think about now that deeper pullback later on in the process for that breakout pullback. And again, if we grind, right, we then keep looking for these bigger channels and we're trying to buy that pullback off that channel. All right, guys, I'm getting excited just thinking about it right now. And remember, careful on the reversals, right? Careful on the reversals. Make sure you go. Well, you can do whatever you want, right? But when you're going against that overall directional momentum, it's better to go a little bit smaller size, right? Save your big bullets, right? Save the big guns so the trades go with that overall direction. Right, that'll make your big winners even bigger. Okay, over on oil, we'll wrap things tonight on the black gold, the Texas tea. Now, oil is a very familiar situation, right? It's an overall bull market on the 60-minute chart right now, and we're basically bullish into a trading range. If we understand how ranges work, the market is rotating off the high, back to the lows, off the high, back to the lows, right? Look what's happened on the oil, right? They went up, took out the high. Naturally now, if rotation is correct, we should make our way lower, take out that low. Okay? We're trying to trade that rotation back and forth. And of course, our bread and butter is always failure patterns, right? Buying low and selling high. Now, as you can imagine, I would love to be a buyer down in these lows, right? Would love to buy down here. Okay, that'd be a great place to buy, especially because you have an overall bull market. But think about this now too. If we end up rotating higher, if we don't go lower first, we talked about the term failed rotation. Okay, if we end up going higher without rotating, what does that tell you? It tells you that buyers are gearing up for a breakout. It also tells you better be very careful trying to short that high, right? Because that failed rotation is a lot of bullishness, right? It's a lot of bullish clues there. Make sense? Okay, so how do we trade this now? It is almost verbatim, almost the same thing as we talked about earlier on the S&P, right? As we go lower, we have this kind of bearish rotation off the high. Momentum will be a little more bearish than we'd like it to be. So all we do is we don't try to pick the bottom on these, right? That can be difficult to do. We let the bears try a couple times, and again, on a faster time frame, we'll see it's much easier, right? We trap them in below moving average and use those stops as fuel. Right? And then if we do get that stop run going higher, where does the market want to go? It's going to want to rotate back up to the other side of that range, right? Now we know where it wants to go over here. What's the best entry on the rotation? A bear trap, right? We call it 2-try trap pattern in our trade room, right? So failure patterns off the low, trap patterns as we rotate back higher again. All right. We may go deeper, right? We may go deeper. So don't let a big move down fool you, right? Trap those bears in, right? Go higher, grab those bear traps, okay? If it V-bottoms, right? We V-bottom off of that low, right? That could easily happen. If it V-bottoms off of that low, what do? You find that channel off the low, off the high, market off the low, find those prior swings, right? Those are my favorites, and don't miss that first test. Okay, first test is the best test off of that low. All right, those are always a bit tricky because it's going to take all the discipline not to chase it. Right, that FOMO kicks in hard. Right, when it starts to whip up like that. I know that from experience. Right, the best goal is to wait for it to crack, to kind of grind higher, and then grab that trap off that low. Right, if we go higher here, how do we short this thing? Crown reversal. Right, buyers once. Buyers twice, trap high. Why crown reversal? Well, because again, we have to assume there's going to be a bigger channel up here, right? I don't want to be selling down here, okay? I want to be selling up here, okay? That will help me avoid that stop run, right? Getting your face ripped off, as we said earlier, right? So you want to make sure you grab that trap high on the reversal going higher, okay? That's the way you stay out of trouble when you're going against that directional bias. Okay, if the bears are unsuccessful, if the buyers are successful, right? If they just rip this thing running higher, well, how do you buy it? How do you buy low? You buy low with bear traps, right? You buy as low as you can with traps, right? That's the way you do it. Okay, as we go higher. On this one though, right, you'll want to make sure we get good, clear confirmation here. Right, it really needs to be convincingly strong going higher because, as I mentioned last night on the video, this right here, this area around 74 area is a very, very big area of resistance. Right, so we need to make sure we get a good, clean break of that 74-ish area. Right, strong move, shallow pullback, higher high in price, traps, baby. Right, that's the way you do it. Right, or we pop up, we end up grinding, mark that high. Mark that low. You guys know this, right? You know this by now, right? You guys are watching all this way to this video, right? Pop up, grind up, find that new channel, okay? Pretty easy there. Again, it rolls up here, right? We really end up ripping. What we do? We find that high, right? We begin waiting for that deeper pullback. We get below the moving average. We trap the bears in. Strong moves like this, they're going to want to retest that high, right? We wait for the pullback. We find those bigger channels, right? We trap those bears in below the moving average. Just as we teach in the free trading course, we buy off channel lows below the moving average, use stops, failures, right? Pullback patterns on the way higher. All right, guys? That will give you a good roadmap if we end up breaking higher here, right? It's pretty much the same game plan as we talked about on the NASDAQ. All right, you get some really easy targets if they can get the breakout going higher. Okay, just please be careful though. Please be careful. This 74 area, right? Very big resistance. You'll see this on the 60-minute chart, linked in the description down below. All right, guys? So a pretty easy game plan, right? Buy low, sell carefully off the high, right? And watch for that breakout, right? Watch for those breakouts. All right. Game plan is all set to go for tomorrow. Did you learn something new today? If you learned something new, I hope you'll subscribe to the channel, hit that like button. Let me know what you liked about it down in the description or down in the comment section below. I always enjoy hearing from you guys down in the comment section below, and don't be afraid to take that free trading course and learn all the setups we talk about so far in the video here tonight. Wrapping things up tonight, thank you so much for watching all the way to the end. I'll tell you, if you can watch this whole video, you are the person I do these videos for, right? I really appreciate your dedication. And if you're willing to put this much effort into my free stuff, you'll absolutely love being a student of our morning trade room. We open up every morning, 8 o'clock Eastern time, and we trade this stuff together. I'll put the membership links in the description. I'll put the free course links in the description. I'll put everything you'll need right down in the description of the YouTube video here tonight. Again, don't be afraid to call the office. If you need any help along the way, if you're having any trouble out there, just call the office. I can always help you out with any part we've talked about here so far tonight. And don't be afraid to use live chat as well. All right, guys, I'm going to wrap things up here for now. Thank you so much for being tonight. Now get out of here. Get some rest. We got a busy day coming tomorrow, right? PPI tomorrow morning. Guys, thanks for being here. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.